Welcome to the Kinvestor Report, where we conduct insightful interviews with CEOs, analysts, and industry participants to discuss the Canadian small cap sector. I'm your host, Arlen Hansen. Before we begin, a standard disclaimer that take no part of this interview as investment advice, and I may or may not own shares in the securities discussed in this interview. And that's just frankly because I don't know what stocks we're talking about here today. If you find these interviews of value, be sure to join our network, subscribe to our page, comment on the videos below, and share them with like-minded investors. Today, I'm welcomed by a very dear friend, Gwen Preston, publisher of the Resource Maven, a small cap mining stock newsletter. Gwen, we have known each other for a very long time. We've traveled the world together, kicking rocks and visiting a bunch of mine sites around the globe, which has been a lot of fun. Gwen writes an excellent letter and continues to bring winning stocks picks for her subscribers, navigating this very difficult market that we're in right now. Gwen, thank you so much for coming on our very first show. How are you today?
Oh, well, thank you for having me. It's lovely to be here with you, Arlen. Like you say, we've known each other a long time. I'm doing okay. I mean, the markets are, like you say, they're difficult. They're hard to understand right now. So, that's my daily headspace. So it would be a bit of a lie to be like, I'm fantastic. But there's opportunity out there. So.
Yeah. Well, navigating this market is very difficult right now. But today we want to talk about uranium. It's quite the buzzword right now. Seems to be the only metal that people are excited to talk about outside like the lithium battery metal space right now. Cameco is trading at 10-year highs, huge breakouts. We're seeing these uranium stocks trade better, get funded to be able to move assets forward. So I just thought it'd be super timely right now to give some of your insights on it. I know you did a big report for your subscribers not so long ago about it. I guess I want to know, what are you excited about the sector right now? It seems like these supply-demand fundamentals have been live for years and years and years. It seems to be the metal that analysts continue to get wrong over all these years. So what's different now? What's changed?
These are good questions and good points for sure. So what's changed now? Okay, so let's just take the clock back a little bit. Uranium loves to move in sort of sharp cycles. There's long been this characterization that the price is boring, and then so there's not enough mines built, and then the utilities that need uranium to run their nuclear reactors suddenly get anxious about supply, and then they all run like lemmings off a cliff to sign contracts, and that sends the price shooting up, and then you get these crazy markets, right? So that's long been the sort of setup in the uranium space. We last saw that in 2009. The price went absolutely bonkers. There were all kinds of contracts signed. And because of that bonkers move in 2009, we got a whole bunch of new mines built. And then we moved, and at that, a big part of that was Kazakhstan really stepping forward into the market, and they amped up supply like you wouldn't believe. So the net result of that was really a uranium bear market, because we ended up with oodles of supply. There was supply sloshing all over the spot market. It didn't help that we had the Fukushima disaster, no. Right? Because that shut down all of Japan's reactors. That added a bunch of extra supply into the spot market, and on it goes. So we had this bear market, way too much supply, like oversupply, excesses, stockpiles, all of this. What was really interesting was that in 2015, the producers of the world decided to work together to change that. So they collectively decided to shut down some mines, curtail production at other mines, start doing some stockpiling, and it really worked. So it was like turning a freighter around, right? They all had to work together to start pushing, and gradually this freighter turned around. And now we are in a position where instead of excess, there is actually deficit. All kinds of details that I've glossed over between 2016 and today, but that's really what's happened. One of the big details within that is worth mentioning was the debut of SPUT, the Sprott Physical Uranium Trust. So not only did the producers decide to cut back on how much they were producing, a bunch of financial players decided that the outlook for uranium was really positive. And they wanted to not only have exposure to that, but also help make that happen. The way you can do that is by sucking up supply from the spot market, like making the deficit more severe. So Sprott, which has several physical commodity trusts. They have a gold one, they have a silver one, right? They offer investors a way to have exposure to a commodity without having to have uranium in your basement or gold in your basement for that matter. You can own it through their physical backed trust. They set up a uranium one, and it was really the first of its kind. There had been one, a small version of it, but it didn't really count before, called Uranium Participation. Didn't really count because it was so tiny. Sprott bought Uranium Participation, transformed it into a large entity, and started buying. So what was really interesting is that the move that we saw in the uranium price back in 2021, when uranium moved from $25 to $40, big move, right? Big move.
Huge move. Yeah.
That was mostly because SPUT came into the market. So
the financial players.
Exactly. They started buying and stockpiling. And so they did make a difference, but they were buying it and putting it away. But it wasn't driven by utilities. It wasn't driven by the actual users of uranium buying it. It was driven by, like you say, the financial players buying it. Then the thing about SPUT is SPUT can only buy when investors are buying it. So when retail investors want exposure to uranium and they buy SPUT, that gives SPUT new money, and then it can deploy that money to buy uranium. When there aren't new investors buying SPUT, it can't buy uranium. And that's actually been the case for over a year now. Pretty much SPUT has not been in the market. But in the last, in 2023 so far, uranium has done super well. So clearly it's not SPUT's influence that's doing it. Instead, it is utilities. And the uranium price has moved whatever it is now, 16% this year on very low volumes. So it's just a real showcase of what happens in a tight market when there is demand, but the supply isn't there. And this is real demand, so to speak. This isn't discretionary demand. This is utilities saying, we need uranium. We're going to take what we can get. And the supplies are very limited. So all of those forecasts that you mentioned that have been out there for so many years, they're really coming to pass right now. And there's other ways of just discussing that as well, but that's really what's happened to the spot price so far this year.
Yeah. I'm curious, does SPUT buy on the open market on the spot price?
It does, yeah. So we say that that's the open market. It's still a very hard market for anyone to really see into because
take delivery on.
Exactly. So you put out a request for delivery, and then you get these contracts, and you have to be a subscriber of one of the uranium price groups like UXC or whatever, so that you can see that. But yes, they buy the spot market, and they haven't been lately. And that, if we're looking ahead, is one of the things that could change if we're trying to decide what's going to happen next.
Yeah. I want to talk about the disparity between the spot price and actually contract pricing. Every sophisticated uranium investor should know that all the utilities buy on a contract long-term basis. Yeah, everyone's paying attention to the spot price so much on whether this thing is valued well or whether uranium prices are moving. Do you think that's the right way to look at this?
I do. It's kind of like all of this talk of inflation lately. When you're jumping into inflation numbers, people start talking about like rental, what's happening to rental inflation. And rental inflation is a really hard number to guess, because when do you look at, what time frame do you look at new leases? What do you look, the prices for new leases, how far back do you go? That's kind of like contract pricing. So the average contract price in the uranium space right now, uranium contracts can be 10 years long. So those prices may have been set as much as 10 years ago. They're still very pertinent because that is still a price that a utility is paying a producer to buy uranium right now. But it is also not pertinent in terms of what a new contract would be signed at. So there is absolutely the two prices in uranium. There's contract and there's spot. The thing about the contract pricing is it's backward looking. So contracts in the uranium space are signed over as long as 10 years. So it's a utility and a producer agreeing to transact uranium for maybe a decade. So that price really matters because it absolutely is still a price that a utility is paying to buy uranium. But it doesn't necessarily say anything about what they are going to pay in the next contract that they sign, right? They're sort of backwards looking prices. And that's why you always hear the phrase that the spot price leads. And the spot price leads because the spot price, by definition, is what people are having to pay today to buy uranium right now. And so, yes, while it isn't the price at which the majority of uranium is being moved today, it's still the most pertinent price for where things are going in the uranium space.
Now, do you think the analysts that are out there calling you prices, do you think they've got a sense of when a lot of those long-term contracts end, like those $25 long-term contracts that will have to convert to, 60 or higher moving forward?
Yeah, this is one of the hard parts about being a uranium investor, is how hard it is to understand the space, right? Because all of these contracts are proprietary. Mm-hmm. The thing is, the UXC and the Trade Tech, which are the two uranium price services in the space, they get information about most of those contracts. They aren't allowed to disclose that information, but that's where they get that's how they are able to create an average contracting price. So they basically know all of the contracts. The analysts know some of it, and there's a bunch more that they can guess. If you spend a lot of time in the uranium space, you can look at the request for proposals. You can you can build a model. So there's a range of levels of information going into those estimates. But certainly one of the big things that's out there right now is the conversation about how 2022 saw the most contracting, number of pounds contracted, that we'd seen in a decade. And that's not super surprising, because the preceding decade involved a lot of bear market years when there was way too much uranium supply. So sure, there wasn't a lot of contracting there. It was really good to see a bunch of contracting happen last year. And that's something that I'd been looking for, to say, okay, this is actually happening. This isn't sort of a speculator's move. This is a real move in the market if there's more pounds being contracted. So far in 2023, we've almost met the 2022 number, and we're only halfway through the year. So we're perhaps on track to double the amount of pounds that are contracted this year versus last year. So that shows that both sides of the market that we've been talking about, the contracting side and the spot side, are just getting busier. And that's because there isn't enough uranium to meet demand, looking out 6 years, something like that, especially, like you say, as these contracts roll off and utilities have been slow to replace those contracts.
Yeah. Now let's talk about the political scene here. What's changed? There's a lot going on. U.S. not wanting to bring in Russian uranium, which in the large portion of the world's production comes from that region. Obviously, we got the Athabasca Basin. We got a few basins in the U.S. that are producing. We see production out of Africa. But how does this change the landscape on where people and investors should be looking to put their money in? Should they be looking at certain countries, which they think is safer, or more demand going to be coming from, or more government support and financing, and to put these assets into production?
Very good question. So I think there's two sort of things worth commenting on in the political side of uranium right now. One is just that sort of political and also public sentiment has shifted so palpably, right? Go back even a few years, and there was still what we would call the conventional, the classic outlook on uranium. Okay, sure, there is some acknowledgement that maybe it's a good energy source, but in general, politicians didn't want to touch it with a 10-foot pole. Public sentiment was still very negative. That was the situation, as it had been for a long time. But in the last few years, that has shifted dramatically. And now there's this pretty wide recognition in many countries around the world, and supported by growing portions of just the public, that nuclear is a green solution, that it provides the baseload power that we need, and that we can't do the green transition and get to a low emissions economy without it. It just doesn't work. So that's super important. And that change has driven a division in this market, right? Like you say, America has, over the last few years, accepted several things in the House and the Senate that are saying no to Russian uranium, and whether that's produced in Russia or refined, so to speak, in Russia. There's 2 stages that uranium has to go through to be turned into fuel for a nuclear facility, and a lot of that refinement capacity is in Russia. So they're saying no to that, and that means that they have to support domestic or friendly sources of or refining capacity for uranium. Because if they don't support it, then they're basically, resigning their own nuclear facilities to not getting supply. It hasn't been that capacity in the United States. It hasn't been supported for years, so it doesn't exist. So yes, I think we're looking ahead at a divided market. People, if you see the word bifurcation around uranium right now, that's because everyone's expecting that this market is going to split into a Russia, China, Kazakh side and an other side. And there's a bunch of producing countries that we don't know where they're going to land or that could work both ways. The details are very much yet to be defined, but there's definitely demand for friendly uranium in America, both from the utilities and because the government is creating its own stockpile of uranium. It's like a strategic reserve, just like it has of oil.
Yeah.
And that can only be filled by friendly countries. So certainly US production, but also Canada and Australia. These are considered friendly countries, so they sort of fall within that net. So will this end up as a market with two different spot prices? It's possible. We could be heading that way. This division is clear enough that we absolutely could be heading that way. We're not there yet, but if you think that we're going to a uranium bull market, I would, and I do, I certainly prefer right now to have exposure to Canadian, American, Australian, the sources of uranium that are going to be part of that, for lack of a better word, Western market, because I think that's where the explosive speculative excitement is going to happen. It doesn't mean that we're going to have an excess of uranium in the East, right? Like, it doesn't mean that market isn't going to be exciting, but it's not going to have the retail investor excitement that this side of the market's going to have, because this just has so much public support, and it's any investor who's interested in uranium is going to invest in the Western market, not in the sort of China, Russia, cloistered, whatever options there are over there.
Yeah, jurisdiction risk, right? And
absolutely,
if you're a North American investor, you want to be investing in assets that you can touch and feel, right? Yeah. Not going into countries that you don't understand all the politics and the risks involved, right?
Absolutely. And there may even be a pricing premium that evolves on this side, because there isn't enough supply to meet the demand in this side, in the Western market. So that isn't there yet, but it may still be coming.
Yeah. What I find interesting about the optimism towards the uranium market is we're seeing this younger generation really embracing and pushing for change. Right. And when you talk about two different splits, that older generation that lived through some of these nuclear disasters are really having a hard time wrapping their heads around it, because what they saw happened. And this new generation of people that want this clean energy, clean investments, and it's by far the cleanest source of energy ever. And they're starting to recognize it, right? Which I think is really cool. One thing we don't talk about a lot in the supply demand is, like, I can pull out a number. It takes 17 years to put an average copper mine into production from discovery. And we're looking at the supply demand imbalance, like, down the road for uranium. Like, where's new production going to come from? Obviously you want to be an explorer in the Athabasca Basin, because that's where you get your uber high grade, really exciting discoveries, put some serious size and some excellent NPVs on your stories. But if we even look back to Rough Rider, Hathor, 12 years ago that discovery was made. And I know that it was bought. Was it by Amir Adani?
Yeah, Amir. That is now part of the UEC, the Uranium Energy portfolio, and so they're breathing some new life into it. But it hasn't done a lot. It's basically sat still for 8 of those 12 years. Yeah, it's crazy, right? And NextGen, which is obviously one of the best deposits in the planet, like, they're going through their process. They're making some great headway, but I don't think that anyone could put, like, a production schedule in front of them, because there's still some hurdles in regards to permitting and accessing capital, right? So that's an interesting part of the uranium story. I don't think, like, the timeline to put these mines into production, I don't care where you are, it's years and years and years. So what's interesting, yes, that's absolutely true. I think one thing for investors who are interested in the space to consider is that there's certainly groups in the space who are acutely aware of that, and have therefore been building their companies to stand out against that setup. So what I'm really talking about here are companies that have been grinding away over the last 5-6 years to get close to production. Now, there's several stories that fit that bill that are in situ recovery stories in the United States. So these are where you like pump a brine down into a uranium deposit, and the brine can sort of get through the deposit, soak up the uranium, and then get pumped out the other side. So you're not digging a hole, you're just moving fluid through the deposit. Then you can pull the uranium out of the fluid. There's a couple stocks that are set up to say go on in situ uranium production in America, and those could be up and running within 6 months, as in they're permitted. There's just some, last minute stuff that like the last 6 months worth of get go that they have to do. So those are really interesting stocks, because I think when investor interest really turns to uranium stocks, there's 2 points to consider. One, well, as set the stage, uranium interest, investors aren't particularly interested in uranium yet, which is a bit crazy given what the price is doing and how strong the fundamentals are. But big picture wise, whatever, that's not where the attention is now. I think it will come, because this price move is what it is. It's very
real. It feels real.
Exactly. Yeah. And at some point it will get to a level where investors can't ignore it. And then investors will turn their interest to uranium stocks. And there's the 2 things that I think matter there are, first of all, there's just not that many uranium stocks. Like the world of uranium stocks is a pretty small world. So when investor interest turns to it, the growth can be dramatic for the stocks that are there, because they just, a huge number of investors pile into a small number of stocks.
And into the best quality names too.
Yes. And then the ones that stand out, the best quality ones, are going to be the ones that really positioned for this moment. And I think that means that investors turning in aren't necessarily exploration experts. They're the ones who are saying, oh, I like uranium. Let's look for a project that's nearing production, or that's nearing build, that might get bought, or ones that can actually start producing into this deficit. So the next gen, I think, is one that really stands out for that. Uranium Energy and some of its peers that are preparing for in situ production in the United States. These are the ones that are really going to step forward, and people are going to be like, oh, those are the answers to the problem that I'm investing in. I'm going to buy those stocks. So totally, it takes forever to build a new mine, but there are some teams that have been using the forever long bear market to try to their advantage to be.
There'll be a success overnight. That's what they'll be.
That's right.
Overnight success over 10 years, right?
Yeah, exactly.
Well, that's a great segue into stocks. So, I think if you're interested in the space, there's names that, are kind of a go-to. Obviously, Cameco for some big cap exposure, the SPUT for spot price exposure, Next Gen Energy looks fantastic for, a production scenario, potential takeout down the road. But what are some names on your list right now that you're following closely? Absolutely.
I agree very much on the Next Gen statement. I think it's one of the best mineral deposits in the world, of any mineral. And so it is absolutely going to stand out when this uranium market attracts some generalist investor attention. Some other ones that I like, I mentioned Uranium Energy just a moment ago. I really think that Amir and his team have done a standout job. I actually had a conversation with him just about a week ago. And he was saying, my team and I woke up every day of the last 5 years thinking this might be the last day that we can do a uranium deal. So they just went out there and were so aggressive, and especially in the last 2 years, on putting together a portfolio of assets that stands out across the uranium space. So they have production ready assets, that in situ recovery style in the United States. They have Athabasca Basin projects, including the Rough Rider project, which, that gives lots of optionality. They could, somebody might want to buy that. They might want to build it. They have a huge number of pounds. They have, a very savvy uranium team. So I think Uranium Energy is one that I pay a lot of attention to.
Yeah, Amir does a great job. He really has knocked that out of the park, and great stock, very liquid, lots of money in the bank. So I think that's a great name.
And you mentioned Cameco, and absolutely everybody buys Cameco, but one of Amir's other motivations was there should be another Cameco-like option, and so that he wanted UEC to become another Cameco-like option. Obviously, they're not the largest uranium producer in the world. They're not that, but they are large, they are liquid, they are large market cap. So, they become an option, or perhaps the option beside Cameco, for institutional money that wants to come into the uranium space. And that really matters. I also really like, it used to be called Labrador Uranium. It is rebranding to Latitude Uranium. LUR is the ticker. And they just did a deal. They have had sort of an earlier stage set of projects in Labrador, Eastern Canada, which are interesting but early stage. And they just did a deal to buy the Angelac project, which is in Nunavut. And Angelac, I think, is a project that has great opportunity to become a project of significance in this market, now that it's in a company that has, lots of access to capital and lots of sort of drive and motivation to move it forward. So that's one that I think where there's a particular project that I like that just changed hands into a group that's really focused on maximizing its potential in this market. So that's another one that I really like.
Now that would be the Thelon Basin, correct?
Yeah, absolutely.
Yeah. So basically mirrors the Athabasca Basin just up north.
Exactly. Farther north.
Yes.
Hasn't had the same super high grades that the Athabasca has, but also hasn't seen the same degree of exploration. Yeah. So
tougher exploration. I think there's quite a few deposits there that are over 1%. I can't name them off the top of my head, but yeah, that's also a very good basin. Let's talk about exploration risk in the Athabasca Basin. I'm obviously on Twitter a lot. I see people yipping about stocks, all bullish, all about these pre-discovery stories in the Athabasca Basin. And now going back to my history investing in uranium stocks, I was really involved with Hathor, with Rough Rider from day one. And that became a wild success for me. I took NextGen Energy public into my shell, helped raise a bunch of that capital, which obviously turned to be a big success. I've been working with ISO Energy over the years too as well, and one of the highest grade uranium deposits in the planet.
Sorry, I should have mentioned ISO as well when we were talking stocks. I got a little distracted, but ISO Energy, ISO, another great portfolio of projects, Athabasca focused, a great deposit in Hurricane. Well, like lots of opportunity to make that bigger and better and figure out what other discoveries they might have on their portfolio.
And, backed by NextGen Energy too, right? So great team. They've had incredible success there. But I guess the message I want to get to people is uranium exploration in the Athabasca Basin is very, very, very challenging. And I've got a rule of thumb that I will never buy an exploration play in the basin unless you've got a discovery.
Yeah.
Because you can miss a discovery by 1 meter.
Absolutely.
And these drill holes are very expensive. These deposits are very small. Like I want to say the pounds in the ground that ISO has is less the size of a football field.
Oh, much less. Much less. It's crazy. Yeah. These are the magic of the Athabasca Basin is that it's super high grade. But the flip side of that is that, like you say, these millions and millions of pounds of uranium exist within, 80 meters by 20 meters wide by 30 meters. That's how big it is. And you're trying to drill down through 300 or 400 meters to try and find that. Whew.
Yeah, and even if you do find that original pearl on the strings that they all talk about, even following up to find that second pearl of strings to start adding tons is very expensive and very challenging. Absolutely. And I just get a kick out of a lot of these people on Twitter, to be quite honest, of new uranium investors, people that don't understand geology or the challenge about working in the basin. It's very expensive, and very, very high risk. When you find that, this is your home run that you sink your teeth into and, hope for a 5X, 10X as they expand the deposit. But there's a lot of risk being there.
Absolutely.
So we'll take that conversation and kind of say, now let's talk about some of the different basins in the U.S. You're talking about ISR recovery, which is a really low grade. I'm sure it's a sandstone deposit to be able to be permeable and leachable. But do you think there's a lower exploration risk in some of these U.S. basins than the Athabasca?
Yes, for sure. Because these deposits, like you say, you're not looking for 5 or 8% uranium. You're looking for 0.03% uranium. Like it's actually shockingly low, but thankfully you're not digging it out of the ground. So it can be that low and that low grade. And because it's so low grade, these things are vast. And so your exploration risk, once you know that you're in a uranium area, your exploration risk is much lower. You need to have enough uranium. You need to have the rocks need to be cracked enough so that the fluids can move through and whatnot. So yes, the Exploration risk is absolutely lower when in general you're looking for lower grade things because the bodies are bigger. You still need to find it in the first place, and I don't want to downplay that, but for sure, the exploration risk is very different, or the set of risks is very different. But the opportunity is really interesting. Now, one thing that I think matters in this conversation, since we're talking about discovery, is that investors love an exciting discovery. And if you're going to drill into 0.05% uranium, that might in time become a very economic, useful sandstone deposit with an ISR opportunity. But ain't nobody going to buy a stock because you report 0.05% uranium, even if it might make sense. What the market is going to care about is if you drill into 5% uranium in the Athabasca Basin. Yeah. So, people often ask me about a brand new discovery. Do you think it can be a mine? And I'm like, hold your horses. I have no idea if it can be a mine, but what I can give you some thoughts on is whether I think the market is going to react to that and how that might play out over the discovery phase. And high-grade discoveries of any commodity attract dramatic attention, right? And then you get this insane speculative, what might it become, price move in the stock. And that's fun. That's part of the reason we're in this space. We're in this space for that and for the things that become mines and become like legit assets. And that, that's really exciting as well. But the discovery phase is you can make a lot of money when it works, but that really only happens with the high grade stuff.
Very similar to drilling a 550 meter copper porphyry deposit in BC at 0.4 copper equivalent, which would be most likely very economic, but the market just doesn't care.
Yeah, you can't get a bid.
Yeah, well, then you got to spend another $100 million drilling it out, and we're in a market right now where these juniors can't raise money for these types of things unless you have that high day discovery and the stock starts to move, can salivate the bankers for them to get paid. And the process goes on, right?
Absolutely, yeah.
Gwen, before we wrap this up, I kind of just got one question, and this might not just be about uranium stocks, but the disparity right now between the venture board, junior mining stocks, and where metal prices are. Like we got gold, kissing near like all-time highs almost. Uranium certainly, a 10-year high, I'm sure. You can go across the board. Inventory levels down everywhere. Metal prices continue to perform very well, but this junior market can't catch a bid. So where do you give us some commentary on that? Just like what your opinions on why it's so hard right now.
Absolutely. Story of my life right now.
You're not alone. You're not alone.
So the malaise in the market for junior mining is widespread, and like you say, it confounds metal prices. It is because of the overall what on earth is going on question, like, are we going into a recession, or is this a soft landing turning into a recovery? We still don't know the answer to that. Nobody knows the answer, and I don't know what is going to even constitute an answer to that. So anyways, we're going to be in this limbo for a while longer. And while we're in this limbo, money is large. There's a lot of money sitting on the sidelines because you can, guess what? Yields are good. And so you can get reasonable returns just sitting in money market funds. And that's where there's a historic amount of money in money market funds. And it's not going into forward-looking growth, economic growth-based stuff. And so that covers all of base metals and energy. That's why money is not going into there. Investors need to have some confidence that the soft landing has happened and we're going into growth before they start positioning for growth. And we're not there yet. So that's unfortunately the case for base metals. For gold, again, it's just people don't know whether interest rates are going to keep going up or interest rates are going to come down. And so the gold price is doing well because central banks are buying it hand over fist, but investors aren't there yet. What I would say with the uranium story is that the move in the uranium price has been very real. That's what we started this conversation with. And I think at some point that move becomes impossible to ignore. I don't know what price that is, but if uranium gets above $60, there's going to be a point where investors are like,
A
And
tipping
maybe
point.
there'll be a confluence of the price getting to that point and some sort of confidence in a soft landing where people are like, okay, I have some confidence that it's time to move a little bit into forward-looking investments. And uranium is just putting its hand up and saying, hi, I'm here and I'm real and this is happening. And as soon as that happens, there could be a bit of a waterfall, like a cascade effect, right? Because of the SPUT factor. If institutions decide to be forward-looking and invest in uranium, a bunch of them are going to buy SPUT. That's going to put SPUT back into the spot market. As soon as SPUT is buying in the spot market, the spot price is going to go up and the cycle should get fueled, right? So I don't know when that's going to happen, but I feel like that is what will happen at some point. I just don't know exactly when that point's going to be. I wish I did.
Yeah, well, if we could all see the future, none of us would be working, right?
Right. Yeah, exactly.
But what I like about that comment though is when I think it's the tipping point's already happened. Like when I'm on Twitter, I follow a lot of these UTwit people and these diehard bull uranium guys on Twitter.
Yeah.
And I think 2 or 3 weeks ago, some of the biggest uranium bulls that I've been following threw the towel in.
Oh, did they?
And we all know that you kind of need market capitulation for stocks to go higher. Your selling needs to be exhausted. And I could feel that sentiment out there of these major bulls just saying, I'm over, I've been in this for 2 years, I've been waiting, and that's it. And sometimes that sparks the bottom too. Right. So, I think we're for some really interesting times here. I believe we're in a very different bull market than we've ever seen. And I know we've chatted about this on the phone, that it's a supply driven bull market. Yeah. Where there's a lack of supply of everything. I think supply chain starts with even education. Where are these mining engineers coming from? Where are these geologists, engineers coming from? Certainly this new millennial crowd and the people, much younger than me, they don't want to be geologists. They want to be YouTube stars or TikTok stars. And so I think a fundamental part of supply chain really starts with education and people. Yeah. And I just don't see the people coming up. Talent is so hard to find right now, right? There's a lot of great assets that need leadership from experienced geologists and financiers to move these assets forward. And the market is really missing those types of people. Now, I
think you're right. And I think you and I were chatting just the other day about a gold company that some assets that have been around that should have been doing well, but weren't, because the people involved didn't have what it took to make that happen. And yes, it's been a tough market, and I'm not saying that it should have been easy, but I think this whole conversation underlines that, especially when you're talking about junior investing, it starts with the people, and you really need to have confidence that the people have the technical expertise, the expertise in their market, whether it's gold or uranium or silver, whatever it is within that space, and have the capital markets savvy and network to make it happen, because it takes all of that for it to work. Otherwise, you're just going to stumble along.
You can't run a great company with just a geologist and an engineer. You can't run a great company with just market people that know how to raise money. You kind of need it all to melt together at the same time with the right people, the right projects, and the right timing. Absolutely. Right. And it's really, really tough to put together in this market right now. Yeah. So,
and like you say, the shortage of people is just one reflection of the shortage. There's a shortage of mines, there's a shortage of projects, there's a shortage of permits, there's a shortage of money, there's a shortage of everything. And I think that just adds together to a coiled spring that at some point is going to drive an insane metals market. It's not going to happen tomorrow because we are not past the recession or soft landing where we go in question. But once we get past that, once we get to a position where people are confident that we're back on a growth trajectory, I think that coiled spring is going to be pretty powerful.
Yeah, well, what I found in my history, Gwen, is these markets turn when you least expect them. And right now, you can ask 100 people out of 100, and nobody is expecting this market to turn around. Everyone's sitting on their hands, waiting. Yeah. There's most likely a ton of capital sitting on the sidelines, waiting for the charts to turn, waiting for people to say the bottom's in. Yeah. And you can make 20 to 30% so fast if you're in the right time, and if you've got some patience right now. Right.
Yeah.
So it's going to be definitely interesting times. Really appreciate you sitting down on your insights on uranium. I think that a lot of people like what you have to say on here. I cannot wait to have you back on the show to talk about something else that's topical at the time. Love your insight. Again, Gwen Preston, author and publisher of the Resource Maven, a great newsletter. I urge you to go to her website, and we'll post the link on our page here, and subscribe to her letter. She does a great job. She's very, very knowledgeable, knows a lot of people. And again, Gwen, thank you so much for joining the show.
Thanks so much for having me. It was fun.